Welcome to August and the US 30 here. The support is obviously still the 15,500. However, this particular pattern that's moving through here is certainly it's looking very much like a corrective pattern. It's not really giving us that nice, clean sort of five waves that we like to look for in an impulse wave to the upside, like the 1, the 2, the 3, the 4 and the 5. This is more of a situation where we've got sort of overlapping wave structures all the time. So it's a sort of it's corrective, and what that means is that it could be something else. I mean, it could be labelled a W and X and a Y here for the wave 4 here. But the main point is that obviously it's round, it's in a range, and the probable wave count for this is that it can have a wave C to the downside here. Wave C is always in 5 waves. Once that's completed, then we can see a move up from that point there. So it's a little bit tricky because the ADP figures that we had last night, which are the private employment figures, they were positive. They were expecting 183. They raised that to 188 or 193,000, but they got 200,000. So it is a positive thing. And they also had positive GDP figures out last night as well. So it is a positive market, but the downside to that, of course, is that the Fed's bond buying process, the 85 billion a month, would be at risk with a positive economy. So a bit of a chicken and an egg there, and these news events are certainly being the catalyst for market drivers, and just to continue that sort of fundamental story there, the non-farm payroll figures are coming out on Friday, and normally the ADP figures are the lead-in for the non-farm payroll figures, which in this case would be predicting Friday as a positive move. But that being the case with the bond buying situation, can really put sort of pressure on that. And I was thinking that a good sort of medium thing to perhaps observe would be the unemployment claims in the US tonight. So because that would be a nice mix of what the traders think the Feds would think of that, so to speak. So those employment figures tonight, the claims, would be also a catalyst to drive us into Friday and Monday, because what normally happens on Friday normally continues on the Monday. So a breaking of even if we got positive figures, from the employment claims, it might give a down, the down move from here, so to speak, which would be breaking that 1550 there, and then the non-farm payrolls also being positive will give us a negative situation here as well. So it might take, So look, it's a very tricky situation, but I can see that this pattern here is more. It has a bias of being corrective. But while the market is supported on the 1550, we've got to say, well, hey, it's supported. So a bit of a tricky situation here. So look, this is just the pattern on the S&P 500. So you can see that. We'll put it technically, as long as this low here stays in place, then this market can be positive to the upside. It's pretty much as simple as that, I guess, in terms of pretty much that, really. So because this can still be counted as wave 1, an A and a B and a C wave here, and then basically up for 1 and an A and a B and a C here. So if it pushes up and finds support on the 1690, then it's positive from that side. So that's another way to sort of look at it. But this rise here, we've got to consider it that it could be the wave 2 here, okay, down into the wave 3 here. So it's really important that this 1690 here, develops as the, as a support. So the simple way would be to, once the first high is above this level here, is just to draw a line across that there, and then that would be your trigger for any upside there, because if it did go up, then it would be taking out these highs here and moving up quite strongly and nicely and all the rest of it. So the setup at the 1690 is a critical situation, even for shorting as well. If the market comes through here, then it normally comes down to some particular point and then retests here, and then you would have the short trade into this point here as a trigger down into this sort of area here for the bounce off this area, coming back to the bounce off that area. It's all a game of supply and demand and the psychology of numbers, where the orders will build up because that is the volume sitting there. So it's just bouncing between those numbers all the time. So anyway, still a bit of a rock and a hard place here in this market. We don't have a clear run on it. Gold's the same as well. We're still sort of working through them, but they will work themselves into a corner. So don't get frustrated. It's a time to focus, and the idea is to work out all the possible options, put them on the table, and then eliminate them one by one. Okay, so Europe's pretty much in the same boat as well. The correction for the FTSE here, yes, we're looking for support on the 6600 here, and that's sort of coming nicely. But this particular correction up here as well, it's a nice B wave actually, because it's in basically three waves like this here. So it does count nicely as a B wave, and that would also produce a 5-wave structure to the downside, okay, as a wave C, same as the US markets, and then would move up from that point. However, I'm also aware too that as long as this low here stays in place, then this market is positive, and it will be positive in the terms that this will be up for 1, back for 2 here, the next structure up would be up for 1 and back for 2 here, and this is also up for 1 and back for 2 here, and the third wave up through here. So normally the 61.8 retracement level from this little area through here, wherever that is up there, so we're looking about here. So if we used 65.80, 65.72, this area in here, a breach of this here would be the sign of negativity coming in through here. But as it stands in here, you want to be basically buying new highs. Any movement up through here is to buy new highs. So right, the Australian market as well. Just want to have a look at the cash market. But first of all, just bear with me here, because I mean, we're seeing support in the base metals, and we'll get to that. But it is the banking sector that has been leading the way, and this is just CBA here. And what I wanted to point out here is a couple of things. I wanted to point out this particular long bar through here. It may have just been a commercial swap or whatever, but to me, it's people selling into volume here, so as that volume's increasing through here, some serious sellers in here, and this little bar here is a sign that the sellers have got control of the market. So if you see this little bar here that's opened higher, shot up, tested higher, and then closed lower on higher volume the previous day, that's a selling signal, and that's showed up in the XJO as such. Just bring that up there if I can. You can see that this particular bar up through here, not so much on higher volume through here, because the it hasn't taken control of all of the market. I mean, Rio and BHP take a fair whopping size of the market, and they're looking sort of quite buoyant as well. So let's have a look at. So basically, what I'm saying here is that the banks could show weakness now, and the resources show strength. So a bit of a a bit of a swap there in terms of the catalyst or the market drivers for this market here. Yeah, look, this, don't worry about the labeling here, because these moves up through here are not very clean in terms of wave structures. So, you know, Elliott's great when you get it right, and to get it right, you need, you know, a clear pattern with it, and there's not a clear pattern through here. And you know, our objective, like yesterday, was to look for support on the 50-50 and trade up to, well, the 50-72 at least, you know, and take it there and wait for support. And yes, it traded high, but it didn't find support on it. It's the same thing here today. Again, here is that it's really about the 50-50 either being the support or being the resistance, and you need to work out if you've got, you know, a tested resistance or support. Now, that said and done here, what I wanted to point out here, this little pattern coming up through here on the 20-minute chart here is in 3 waves, isn't it? So that's a move that's come down through here, and it's got a 3-wave counter trend. So that makes it corrective, doesn't it? So that means that this should move down here further. So if that's going to be the case in terms of trading, so you've got the direction for Elliott in a sense because of that 3-wave correction there. But at the same time, we really want to see this as a, you know, stuck under there, basically. You know, it's just as simple as that, really. Some sort of retesting there, or, you know, or a break of this particular low here would do the job as well. When it hits 30 here, it will bounce back to 40 here, and you need to accommodate that, you know, and then it should sort of work lower. But once you get into group 1 here, I'm not normally a trader coming in group 1. I would only trade long. I don't trade short into group 2 because it bounces around. There's too many orders sitting at these numbers here at 10, 20 and 30, and it just makes it sort of really sort of complicated. The SPY is, the September contract is trading at the right on the 5,000 there, as you can see. So obviously would use that there, but you can still see this 3-wave pattern here, which makes it corrective. Sure, it could, it's corrections are a bit of a tricky situation, because, you know, this A, B and C here could just be the A wave in terms. So what I mean by that is just an A and a B and a C for the A wave, and then the B wave is in 3 waves like this here, and then the C wave is in 5 waves like that. So basically it's just a larger A, B and C here, and then down from that point there. So just be aware of that as well. So if we do get 5 waves up here, then, you know, you need to use that situation there. Of course, support on top of the 50-30 there would see long trades up from that there, but you definitely need to have, you know, some type of little zigzag correction across the 30, and then look for support on it, and then go to the upside. Alrighty, let's have a look at the resources, the drivers. Okay, starting with copper, we were looking for a bounce off the $3, the 300 here. Didn't quite make it. It bounced off the top of group 1, which is 303 here. Pretty much the same as over here. But the main point is that we were tracking 5 waves down through here, and that's completed. So now after the 5 waves here, we'd be looking for, well, textbook stuff of anywhere between 50 and 60% on sort of average. So up in this area here, say up to the 315 up there. But in reality, there's 2 things here. There's the supply areas where the volume is. So this is one of the, you know, that's one of the resistance areas there. And of course, the other one there is further up through here. So it's this is where the, you know, this is where you know, stops are triggered and people buying and selling. The most volume was turned over at these points here. So, you know, that's your 38.2 retracement, and that's your sort of 60 odd % retracement. But what we're looking for here now is we're looking for an A wave and a B wave, and the B wave's always in 3 waves, and then the C wave here is always in 5 waves going up through here, such like this. This A wave here can be in 3 waves, or it can be in 5 waves. That's the thing with the A waves, and that would normally dictate what type of correction we're going to get, because in Elliott terms there's 12 corrections. It's debatable between Elliotticians if there's 11 or 12, and things have slightly changed over the years, but you know, from Elliott's point of view to practice point of view as well. But anyway, that's another story. And but look, our focus has been in through here, so just drilling in through here. As you know, yesterday we've been using the 20-minute chart. Just thought I'd go to the larger thing here. Yesterday we were looking for wave 4 either here or here, and trying to count 5 waves down through to, you know, down into this low area through here for the bounce. It just bounced. You know, what can you do? We'll say. So we're looking for the move up through here. This strong wave here does appear to be, you know, it's got the personality of a third wave rather than a wave C as I got here, because I've got like 1, 2, 3, 4, 5 here, and I've got the A wave and wave 1 here. So the bias would be for this to be a wave 3 here rather than a wave C, the A, the B and the C here. But what I'm also sort of pointing out here too is that all of this here, be it 5 waves up, because you know we're looking for 3 waves, that this would still be just the A wave here. Do you know what I mean? So that could be the A wave in 5 waves, and then we have the B wave here as such. Yeah, then we have the C wave here. And the reason I'm pointing this out for too is because, you know, it's the catalyst and the driver for the Australian dollar, the BHPs of the world, you know, the resources and so forth. So understanding this, you know, can really help your short-term trading, be it, you know, the SPY, the ASX, you know, CFD, or, you know, whatever market. So, you know, copper is really quite sort of central. It can have a sort of relationship, say, with the Australian dollar around the sort of 80% mark, and that can sort of come and go a little bit. So you've got to kind of figure out a few other little things that are involved in it, you know, such as the US dollar and any geo or political points with commodities as well. Like today we've got the manufacturing figures coming out from China, 11 o'clock or 11:30. You know, they're going to be a catalyst for our market today. Okay, so the other commodities have popped up as well, and oil is one of them as well. So look, I'm just sort of labeling this a little bit different here, and one of the reasons for that is because of the positive little wave structure that we've seen to the upside here, moving up quite sort of sharply through here. But the other point here is from Brent, and Brent is normally the sort of I don't know, it's more sort of the Arab world, I guess, the Saudi sort of world indicator, I guess. But I can see that, you know, in counting this up here on the 8-hour chart off this major trading level 1 here, is that this is a corrective move down through here. Okay, so if that's a corrective move, then that high should be taken out through here. If that's going to be the case, then the stock market is going to be the driver for that as well. So you know, support here on the 108 here, $108 is really important and critical for this here, but so is the Western Texas here as well at 105, so support on this here as well. So the structure here could be pretty much the same as the copper that we were just looking at, in terms of the 1, the 2, the 3 here, the 4 here, the 5 here, and then the A, the B and the C here, and then support on here. Okay, so to get some sort of little zigzaggy thing or some type of, you know, correction across the 105, then support, that's what you're looking for. Otherwise you just buy and you keep the stop, you know, well below the 61.8 retracement level through here as such. Yeah, so the gold market, it's already done a bounce already, so I didn't really pull that apart. I thought there was like one more little push in here before we got the bounce here, and yeah, so that's that. So it's still still looking at a couple of things here is that I'll just clean this up here before I explain things so it doesn't take our eye too far away. So obviously the 4's in there somewhere and the 5's maybe that new low there. So now there's a couple of things here. First of all, the 1300 is the closest largest number. So while the market is testing that for support, then we have to give it consideration of being a positive market. If it was the retested resistance, well, then we simply take the buyer side and look for shorts on that side. Now, that concept is not always right, but it's right more often than it's not. And if we use that as a premise to base our trades off, then we start to build up the list of probabilities of being right, and that's what trading is to me. So so the next step down is in degrees of structure or degrees of structure returning price is our little group 1 here, and we know that the market's trapped in group 1. It doesn't have support on top of group 1. If that was the case, then we would see the market much higher, and it could certainly do that. And if it does do that, then it will move probably up to 1400, because this correction across here in, say, Richard Wyckoff's terms, which was one of the traders that I like the most from I think 1880 to 1930s or 40s. He understood. He's one that got the price and volume relationship working properly. So a bit of a hero there. So the distance across here would be the distance to the upside. So finding support on the 330 here is the key to to get the timing right to get to the upside, because trading and analysis is all about getting the timing right. So is life itself, I guess. So support on that will take us to the upside. If not, then we'll be going to the downside. The pivot in here, the 1320 here, as a retested resistance, is the first sign of weakness. Okay, so we don't have that. Even though the market broke to the downside here, it hadn't actually retested it until this point here, and it's still not done. I mean, it could still come down through here and find it. It's basically swinging at the moment, isn't it? So that's that. Now, in terms of the wave count, I've got 2 wave counts here that we need to put on the table quite simply, and the first one we'll look at is the 5 waves down for the A wave here, and then we need to look a little bit like the this is very much like the stock market pattern with the Dow Jones and the other ones as well. So the A wave down to here, and then the B wave over to here, and a B wave is always in 3 waves. And if the A wave is simple, then the B wave is going to be complex, and it certainly is complex in terms of the A wave here, a smaller A, B, C in here for the B wave, and then the C wave up through here, because in terms of Elliott, you get, if one wave structure is simple, so like normally people know that if wave 2 here is simple, then the next one, the wave 4, will be complex. But that's the same in all structures as well. So it's just the guideline in alternating, and you'll see it in nature, in sunflowers, things, and all over the place. So if this whole structure here is simple, then this one's going to be complex, and this one could be more simple or more complex than this one. So they're always alternating. You never get what you think you're going to get. You always get the opposite. Once that penny drops, then just another piece of the puzzle falls into place. So anyway, an A and a B and a C wave here as the end of the correction, and then to the upside. That's one way of looking at it. The other way of looking at it, because we got 5 waves here, an impulse wave, that means that we can look at this as being wave 1 to here, an A and a B and a C for wave 2 here, and then from wave 2 we'd be looking at these little 5 waves down here as wave 1, then an A, B, C coming back up 61.8%, but obviously this is the main supply level up here, as we discussed before. So that's where all the orders are going to be sitting, and that's where the resistance is, the supply, the game of supply and demand. So so this could be down for 1 here, back up for 2 here, and then working lower for wave 3 here, coming to the downside. So that's where the 1320 comes in as the pivot in group 1 as being a solid retest. So this is actually finally working into a point where it will break to the upside or to the downside, and both are very valid, by the way, as well. So be flexible. Don't be scientific about it as much as you possibly can, rather than emotional about it. And if you can't sort of figure things out, and say you normally trade with 5 lots, well then just put the first lot in as one, and then add another one, and as you feel that it's going in that right direction, rather than just sort of shoveling it all in and sort of sweating it out. Alrighty, where are we up to? We've done oil, copper, gold. Let's have a look at FX. Okay, starting with the euro here. We weren't too sure if we had a top in play here or not, but we also understood that we could have had wave 3 here, wave 4, and looking for wave 5 up through here, and that sort of seems to be the case as such. So it's it could have its high in play now. So let's just sort of drill in there and have a little look. I wonder if there's a smaller chart than this here. Yeah, I think the main point here is that the price action over last night, if I just forget this bit here just for a moment, just sort of blank it out, so to speak, then we've got a very nice wave structure here. We've got the 1 and the 2, the 5 waves up for the 3, the ABC for the 4th, and up for the 5th here. So yeah, so that could be the top there. So but what we'll do is that this move down through here is in 5 waves. So you can see the small little consolidation there. You can see the the third wave, the stronger part of it through here, which is normally taking out the stops. That's why it just triggers and moves very quick. Then the 4th and the 5th through here. So if we get 5 waves here, then you know what happens next. So 5 waves here would give us some sort of 3-wave counter trend, normally back up to the euro can have shallow retracement levels, so it can just come to the 4th wave 1 less degree to here, or it could come back up here, the 61.8% or whatever. But because we've got 5 waves here, we'll be looking for another 5 here. Now that gives us the A, the B, and the C. That much we know. If we're wrong, of course, and we get support on here, the 13330 here, the top of group 1, well then we just go long from that point there. Okay, but as it stands at the moment, we've got a 3-wave structure here. In this 3-wave structure, this can also turn into a 5-wave structure. So a longer 3rd wave perhaps, then a 4th, and then a 5th. If we get that, then we know that we get a counter trend here and we go off again. So we get the counter trend, and then we get another 5 waves coming down through here. Okay, if we only get all we can say with this degree of structure we've got is we've got 5 here. So after some type of correction, we'll get another 5. Okay, so after that 5 there, we can 1, A, B, and C. If this market moves up through to here, then it's really overlapping the wave structure here. So if it moves back up above the 133, then we know that that's a corrective move there. And once you know that's a corrective move by this moving up here, then you'll be looking for long trades and looking for that high to be taken out here. So after you get an A and a B and a C here, then you'll be looking for support somewhere in here and building from that point. Okay. But if this wave 3 here should be longer than this wave 1 here, okay? But it will have difficulty getting through this this group 2 block here, so there will be a struggle here. So yeah, you just need to work out if it's going to be the A, the B, and the C to here, and then if it moves up here, that makes it the A, B, C. Okay. If not, if it moves down through here, and also check to see if it's moving with the US indices as well, if there's any correlation there, because if that's the case, then you can start looking at other markets that are correlating as well, and it can make life a little bit easier. Right, the Australian dollar. As we were mentioning yesterday, we were looking for 5 waves down, and it's just sort of why we're here. this wave 4 here and wave 5 to here, and wave 3 to here, this has been quite a long structure coming all the way down from here, so coming back here. So it's basically been, all this wave 1 here, and because the extension was in wave 3, so that leaves us 1, 2, 3, 4, possibly 5 cents here. So normally wave 1 here would equal wave 5 in distance, okay, because wave 3 here has got the extension in it. So this is all the extending factors here down to wave 3 here and wave 4 here. So that 5 cents we just looked at would be the 1, 2, 3, 4, 5. So 88 would be about right here. And what we're looking for here is we're looking for 5 waves down. And as I mentioned yesterday, I wasn't quite sure if, and I'm still not quite sure if that wave 4 should go to there. And this corrective move here is actually a C, D, and E, a part of a triangle. Bit hard to swallow that, but so I'll just go with the possible more depth here, and that would be 5 waves down: the 1, the 2, the 3rd wave down, the 4th wave coming back to the 4th wave of 1 lesser degree, and we can explore that in a moment, and then the wave 5 coming down through here, and this wave 5 should be roughly the same length as this one here. That said, we are around 90, which is a large number, and large numbers attract larger orders and therefore skew price patterns, so need to be slightly sort of open and mindful about analysing that. But our main point was to count 5 waves down through here, and that could be in place, or there could be one more little low through here. But either way, you can expect some choppy price action to come through here. So what we've been doing yesterday is, we've been counting 5 down, so we can see this is clearly 1 and back for 2 here, and then it picks up speed down here into, this is the 3rd of the 3rd, so we've got from wave 2 here, we're looking for 5 waves down, so we've got wave 1 here, wave 2 here, wave 3 is the quickest through here, little wave 4 and wave 5 here. This does bug me a little bit because this wave 4 here is a bit small for what's going on here, so maybe this wave 3 here is down through to here. That's a possibility, but anyway, we'll stay with what we've got so far. So 3, 4, and then wave 5 down through to here in terms of the 1, the 2, the 3, the 4, and the 5 through here. So in terms of trading, and wave 4 would take us back up to 91. So if that was going to be the case, then of course you would want 90 as support. Okay, so you'd have to wait for that to be long. So that's not the case. So any trading here would maybe on the short side. That said, remember that the Australian dollar can move with with the copper market, and we're expecting that to go higher as well. So in its own way, that would have same here as well. So this group 2 here would become very important through here, if we can drill into here a little bit. So that's the move up through here. It does appear to be, well, quite impulsive, doesn't it? It doesn't have any overlapping wave structures. So that's the 3rd, the 4th, and the 5th wave to here. So this can certainly be up for wave 1 or an A wave coming back up, and this can be, the profit taking at this number here, the order sitting there. So look, if this group 2 here became the 89.72 became the retested resistance, then you could look at going short, adding under the 89.65 and getting down to the 50, where there'll be a bounce that way coming back through to here, and that retest there would be important as well. But if that's a move to the upside there, then we need to look at this here as an ABC correction coming through here. So this looks like it's 5 waves here, 1, 2, 3, 4, 5, doesn't it? So we can call that the A wave, that the B wave, and then this the C wave coming in through to here. So it doesn't really need to come any further than these little guys here. So it should move up from that point there. Now, if it does, crash through here and finds this as resistance here, that and this too, this move up here in terms of the right look and feel and perspective and so forth, the ratio and proportions. This move up through here is this move here is kind of the right corrective size for that, isn't it? I mean, if this correction got really big here, then it's too big for this particular move here, and it just telling you that it's a bearish situation, that the sellers are really holding, the correction is bigger than the buyers, basically. So that's a point of looking at there. But this tested here as the retested resistance would be the line in the sand there. So once you can establish that, then you use the 65 as the trigger, or the 80 as a trigger to the upside through here. So allow the market to open and move and groove a little bit, and let the volume flow and take it from that point there. Alrighty, well, that's it. So thanks for listening, and good morning, and good luck.